Have you owned an investment property for a long time, and every time you think about selling, the same thought stops you cold? Capital gains, depreciation recapture, state taxes. Before you know it, 30 to 40% of your profit could disappear to taxes. But what if I told you there's a legal IRS-approved strategy that allows you to sell real estate, reinvest, and defer those taxes, sometimes indefinitely? That's exactly what a 1031 exchange does. Today, I'm breaking it down in plain English. I'm Pauline Lee, licensed realtor and mortgage loan officer, and I help investors and homeowners make smart, strategic decisions with real estate and financing. Before we dive in, if you own investment property and want to understand your options clearly before making a move, make sure to subscribe and turn on notifications. Feel free to book a strategy call using the link below. The earlier you plan, the more control you keep. What is a 1031 exchange? A 1031 exchange, named after Section 1031 of the IRS tax code, allows you to sell an investment property or rental property, reinvest the proceeds with another investment property, and defer paying capital gains taxes instead of cutting a big check to the IRS. Important: this applies to investment or business use properties, not primary residences. The key idea is simple. You're not cashing out, you're rolling your equity forward. If you're already wondering whether your property qualifies, drop a comment below or message me. I'm happy to point you in the right direction. Why this matters for long-term owners. This strategy is especially powerful if you've owned property for 10, 15, or 20 plus years, benefited from appreciation, and claimed depreciation over time. When you sell without a 1031 exchange, you may face federal capital gains taxes, state capital gains taxes, depreciation recapture, and net investment income tax in some cases. A 1031 exchange doesn't erase taxes, it defers them, but deferral can mean more buying power, getting into larger or multiple properties, portfolio restructuring, and improved cash flow. And many investors repeat this process multiple times. Let's look at what this can mean in a real-world example. Imagine this scenario. Your investment property sells for $1 million. The original basis was $100,000 for a total gain of $900,000. If you sell and do not use the 1031 exchange, your estimated tax exposure could be around $225,000. That means instead of reinvesting $1 million, you would only have about $775,000 left to purchase your next property. Now, compare that to a properly structured 1031 exchange. If the taxes are deferred, you can reinvest the full $1 million, giving you an additional $225,000 in buying power. That difference alone can determine whether you purchase a larger asset, multiple properties, or significantly improve your long-term cash flow. The rules you need to know. This is where details matter. A few critical rules. You must identify the replacement property within 45 days. You must close on the replacement property within 180 days. The funds must be held by a qualified intermediary, and the replacement property must be equal or greater value. This is not DIY territory. Coordination is key. Before listing anything, talk to a professional. Planning before you sell can save you hundreds of thousands in taxes. As your real estate professional, I can help guide you through this strategy and connect you with the right qualified intermediaries, CPAs, and legal professionals to help protect your gains and structure the exchange properly from the start. This is where having the right team truly matters, and the right guidance can make the difference between preserving your wealth and accidentally triggering unnecessary taxes. What if you need to buy before you sell? This is where things get interesting and where my mortgage role becomes especially valuable. In a competitive market, many investors find the perfect replacement property before the existing one sells. That's called a reverse 1031 exchange. The challenge? You often need access to the equity before selling the old property. As a mortgage broker, I help solve this with bridge loans, short-term financing, and equity access strategies. These tools allow you to secure the replacement property first, maintain 1031 eligibility, and avoid rushing the sale of your departing property. This is an advanced strategy, but incredibly powerful when done right. If you're hearing about reverse 1031s for the first time, This is exactly why you want financing and real estate strategy aligned. And if you want to go deeper into how bridge loans work and when they make sense, check out my video specifically on bridge loans. I break down scenarios, risks, and smart planning strategies there. Common misconceptions. Let me clear up a few myths. 1031 exchanges are only for huge investors. Not true. Even single property owners can benefit. I'll never pay taxes. Taxes are deferred, not forgiven. But smart planning matters. I'll figure it out after I sell. That's how exchanges fail. Here's what to remember. A 1031 exchange lets you defer capital gains taxes, not eliminate, but defer. And that deferral can preserve a significant portion of your equity, allowing it to continue working for you instead of being reduced by an immediate tax bill. It's ideal for long-held investment properties. The longer you've owned the property, the greater the appreciation and depreciation recapture exposure may be. That's where this strategy becomes especially powerful for seasoned landlords and long-term investors. Planning before you sell is critical. A 1031 exchange cannot be retroactively applied. Your team, the structure, and the strategy must be in place before closing. Early planning gives you options. Waiting removes them. Reverse 1031s require financing strategy. In competitive markets, buying first can be the difference between securing or losing an opportunity. Coordinating lending, timing, and exchange rules is where strategic financing plays a major role. Having a realtor and mortgage broker involved creates leverage. When your real estate strategy and financing strategy are aligned from the beginning, you gain clarity, control, and stronger execution. Coordinated guidance can help you protect your gains, expand your portfolio intelligently, and move forward with confidence. If you're a homeowner or investor sitting on appreciated property and wondering, should I sell? What would my taxes look like? Could a 1031 exchange make sense for me? Schedule a no-obligation strategy call with me. Even if you don't move forward, you'll walk away with clarity. If this video helped you, please like, subscribe, and share. It helps more investors make smarter decisions. I'm Pauline Lee, licensed Realtor and Mortgage Loan Officer, with experience guiding investors through both the real estate transaction and the financing strategy, and with a trusted network of qualified intermediaries, CPAs, and legal professionals. I help assemble the right team to protect your investment and preserve your gains. I look forward to helping you make your next move strategically. I'll see you in the next one.